When the market realizes that the Fed cannot come out and just print us out of the next recession, you're going to see all-out panic hit the market.
Wouldn't it be wonderful if we had a crystal ball that could predict what various asset values will do in the future? That is simply not doable. But today, I had the next best thing for you. In this video, Gareth Soloway gives very important advice for cryptocurrency. So, stay till the end to hear what this crypto genius has to say.
Maybe they just don't want to admit defeat and say, hey, we're going into a recession.
The last time months ago, he virtually exactly predicted the price path that Bitcoin would take. Today, he is back to speak about Bitcoin as well as the stock market, the Fed's interest rates, and other topics. Let's get started. You will learn more.
Even, with COVID crashing the economy, the Fed was able to flood the markets with enough liquidity that stocks ripped higher. I mean, we had some of the best years following the initial drop in March 2020 from COVID.
Gareth Soloway said, everyone is staring at the Federal Reserve and asking, hey, look, they're claiming they're fighting inflation. Real yields aren't even close to positive. And they're looking at the job opportunities there. And they're saying, hey, we're going to stay on fighting inflation. However, it seems that the bond market does not think that the Federal Reserve will continue to act as it has said it would, thus believe that the bond market always tells the truth.
And the Fed only has a little bit more rate hike to go before they're going to have to stop.
In spite of the fact that the Fed has a lengthy history of controlling the monetary system, they generally don't get things right very frequently. So, in my opinion, the bond market is just right. I believe you should consider the GDP figures as well as the recent releases of corporate results, which show that the economy is slowing down and that many corporations are decreasing their forecasts since the Fed is already in place. They're saying, hey, listen, the employment stats are excellent, for example. Thus, a recession is not present. And the fact that everyone is aware that jobs are a lagging signal is what really irritates me. Because of this, the employment figures 3 months from now will reflect the decisions made or the status of the economy at the time. I'm not sure why they're doing it, so they need to be aware that it is a lagging symptom if they are. It's possible that they just don't want to admit defeat and say that a recession is coming.
I think we're heading into a recession by later this year.
I think it also helps to be aware of our high-end inflation. It's out of control. If they kind of suggested they would still be harsh if they threw in the towel and declared they were throwing in the towel, the markets would probably become really unpredictable and inflation may not decrease as much. So, to put it plainly, it's a catastrophe. And we wonder how that would affect Bitcoin. Although I'm not sure whether the Federal Reserve will be able to quickly get out of this problem, I do agree with the bond market. The Fed only has a few more rate rises remaining until it must stop raising rates, and I predict that a recession will begin before the end of this year. So, buckle up.
We'll take a look at the charts here and take a look at the S&P. We'll flip over to the S&P here and take a look. So basically, you're right. We've had this beautiful rally. You could see we were stuck in this channel. We broke even above the channel, which shows relative strength. And we're kind of coming into this area right here. So we are coming into resistance in the near term. If we draw a trend line right there, you can see from this pivot high, we're now retesting that same high. And I think it's important to recognize that the markets don't necessarily move on the economics of things, but more so on the Federal Reserve.
In light of this, we have recently seen some gains, paradoxically, in the stock market, and then some little weakening in the currency. As a matter of fact, just look at the charts. And the reason why you might say, well, why does Bitcoin need to show strength? Well, it doesn't need to, but the bottom line is, when you have a stock market rallying, it's telling you that there's risk on, and generally Bitcoin, it's risk too.
I always say to people, charts are truth, meaning that, you can go on, listen to the news, you can read stories online. There's always bias in that stuff. I mean, even if someone tries not to have bias, we inherently have bias. But what you can't do is say that a chart has bias. A chart is just showing you the general price action of basically millions and millions and millions of investors. And if you can read those patterns, it tells you the likely scenario of what's going to happen.
Are we at the bottom of Bitcoin? Who knows for sure? So it's like the Nasdaq goes up 2%. Oftentimes, you'll see Bitcoin up 4 or 6 or 8%. You haven't seen that here, and that has to be something that you pay attention to, because I think what's going on here is that Bitcoin has floated up, but you're not seeing the same bang for your buck as the technology stocks. You can practically see the writing on the wall at this point, since let's suppose the Nasdaq begins to truly sink once again, it has already recovered 15 or 20% from its lows. You can't tell me that Bitcoin won't at least break below here and move lower, and truly, if you're talking the law, which was I believe 17,600 or whatever it was, if the Nasdaq loses 20% back to its previous lows, you're actually not that far from 12,000 or 13,000 with Bitcoin. The fear just sets in, and panic selling spreads across the markets.
Again, I think it's important to recognize that the longer term pattern here is bearish. I do still think we could go test one more time the high here, get up to about 25,500. But I have to be honest, I still have a downside ultimate target of 12 to 13,000 on Bitcoin. So I do think there's another leg lower.
Those smart and have cash reserved to pick up the bargains. So I do believe you have greater disadvantages. I regrettably like Bitcoin over the long haul. I firmly believe that it is precisely what the world needs, but it must first clear this clog. Bitcoin will stay. It is the future. You haven't seen enough ordinary investors get so alarmed that they really start claiming that the investment is worthless, just as we saw in 2018 before the 20s in 2019 began to climb higher in the 21 run-up. The markets will eventually start to roll over, which will knock out this channel, and at that time, you have to assume that Bitcoin's channel will as well. Once again, a Bitcoin channel considers how level it is in comparison. At this point, this sudden drop could lead to the next super FOMO rally. In terms of a bearish consolidation pattern, it is preparing for its next leap.
So just so everyone knows what I'm looking to do, basically below 20, at 19, I put 1/6 of what I want to own as a HODL position in Bitcoin into a portfolio, right? And basically every 2 to 3,000 down, I'm going to add another 1/6. So I'll have 2/6, 3/6, 4/6, 5/6 of a position, and then finally a full position at 6/6. If it gets below 10,000, that would be my last add right there. So I would say to people, I mean, you got to choose what you're most comfortable with. But my recommendation is at this stage, just dollar cost average at this point down. Just do it slowly so you can space out your buys. And then eventually I do believe that you see 100,000 on it, maybe 500, even a million down the road.